Good afternoon, everyone. Hi, thank you so much for joining today's webinar, using AI to detect financial crime. Today's webinar is brought to you by Hawk, the leading provider of technology for anti-money laundering solutions, sanctions, and fraud prevention, and in partnership with us here at Transform Finance. My name's Paul Sargent. I'm the event director at Transform Finance. Really great content coming to you today, so thanks so much for joining. As you know, a lot of you are aware, AI and machine learning plays a pivotal role in the detection of suspicious activity through proactive identification of patterns, perpetual monitoring for anomalies, and prescriptive remediation. And above all, AI agility in data processing, profiling significantly increases speed, helping respective teams to quickly react to any threats. Today we're going to be looking into how AI can help manage economic risk more effectively. Can help that through improved KYC, customer due diligence, identifying authentic consumer and financial institutions, spotting unusual activity in transactions, and more efficient operational enhancements. And financial institutions can really reap potential benefits that AI offers through increased operational efficiency, optimization, and far better risk management. And it can also help protect consumers from harm caused by financial crime through improved prevention and improved detection. As I'm sure we're all aware, perpetrators are becoming increasingly more innovative, and it's important that financial institutions stay one step ahead, and adopting AI can help tackle much of the fraud that happens today, and that could take place tomorrow. At the same time, it reduces costs and time, as well as improving both customer experience and customer protection. And our subject matter expert, our presenter today, is Mr. Michael Shearer, who's the Group Head of Compliance. He was the Group Head of Compliance and Product Management at HSBC before joining Hawk as Chief Solution Officer this year. Michael's achievements at HSBC include the creation of an award-winning analytics application which integrated customer transaction, risk and external data from over 50 countries to enable risk detection across multiple customer types. And he also led the creation of an industry-first cloud-based machine learning platform for financial crime detection. Before he joined HSBC, Michael spent 20 years working in government intelligence and counter-terrorism. He's also the author of a book that was published this year called Hands-on Entity Resolution, so be sure to go and check that out as well. And before I hand over to Michael for his presentation, I'd like to give the floor to Volk Schubert, who's the Chief Revenue Officer at Hawk. He has extensive experience in the financial services industry, previously holding leadership roles within PayOne, Ingenco Payment Services, and ACI worldwide. He's passionate about RegTech, the AML sector, and how the use of AI can help improve the way society can fight financial crime. And just before we hand over to Volk, we're going to play a short video for you introducing what Hawk do. So please enjoy this and enjoy the webinar.
Thank you, Paul, for the kind introduction. A very warm welcome to everybody from my side. It allows our customers to be so much more reactive to new financial crime threats, as well as to react to regulatory change and industry trends. AI has been proven to be a true game changer for compliance programs of our customers to further achieve those goals. And now, without further ado, please allow me to hand over to Michael Shearer. I think Paul did a great job already highlighting his accolades and accomplishments. And enjoy the webinar.
Thanks very much, Volk. Thank you very much for the introduction there, and to Paul for the introduction. It's great to be with everyone today, and good morning, good afternoon, good evening, wherever you are. So I'm going to take you through some material on why we feel that using AI is really essential to effectively detect financial crime. And this material is based on my experience over the last decade in introducing these systems in a large financial organization. So just share my screen, and we have a few slides to help us as we go along. So I'm going to discuss the problem here in a number of different sections. First of all, we're going to talk a little bit about why AI is essential, particularly in anti-money laundering detection. Then we're going to have a look at how using AI is different from the traditional detection and rules-based systems that the industry has used for many years. We're going to have a think about what are some of the pitfalls to look out for when you're introducing an AI platform into an organization. And then finally, I'll summarize with some key takeaways for those of you thinking about taking the first steps on your AI journey to fight financial crime. So to begin with, what I'd like to cover is why is AI essential? We've made some statements about how AI is important in really truly effectively tackling financial crime, but why is that? And one of the main reasons that AI can really help is because of the problem of false positives in the industry. So for those of you working in financial crime, you will know this problem all too well, where even the best detection mechanisms that we have to search for financial crime amongst the haystack of normal behavior struggle to correctly identify that behavior. What I wanted to do was just to delve in a little bit into why that is and what's some of the maths that sits behind that makes the challenge in our industry so difficult. So this first slide that I have here is called the curse of false positives. And I want to take with you on a journey here to imagine that you're running a financial institution. And imagine that you have 1 million customers in your organization. You're doing very well. But 1 in 1,000 of those customers is suspicious. So only 1 in 1,000 is someone of concern from a financial crime risk point of view. Fairly reasonable number. So of your customer population, you have roughly 999,000 good customers, people you're very happy with. But you have 1,000 that may be of concern. And now imagine that you have a machine that can correctly differentiate between the good and the bad 99% of the time. So it gets it right 99 times out of 100. So if we apply our wonderful financial crime detecting machine to our population of good customers, what do we find? We find that we get 998,000 good customers marked as good, and they're true negatives in our population. So we know they're not of concern, that's all good. But of our population of good customers, 1%, our machine gets it wrong. And that equates to 9,990 customers who are actually good customers, but we think they're not. And so those are the false positives. Those are where we're detecting something that really isn't really there. The material that the machine presents to investigators to consider is still 90% wrong. And that's despite the fact that the machine itself is getting it right 99% of the time. And I know that sounds really counterintuitive, but it's a product of how rare suspicion is in the overall population. So if you remember, I started by saying that it was only 1 in 1,000 of the population that was suspicious. And it's the ratio between that suspicion population and the accuracy of the machine, the 99% of the machine, that determines your false positive ratio. And this is why AML detection is so hard. It's because actually, fortunately, financial crime, anti-money laundering is quite rare. And so spotting that rare activity without generating a huge amount of noise, it's really quite tricky. And that's why it's been a bit of a bane of the industry for some time. However, there's good news. And the good news is that AI can help with this. And so I'll try and explain a little bit how that is. So I'm going to compare here a traditional coarse grain manual rules-based system, which I've got on the left-hand side of the slide, to a more fine-grain AI approach. So in a traditional rules-based approach, you define a set of rules written by human beings, so they're inevitably relatively simple, and they pick out a population of concern. But because they're relatively simple, they're quite broad. So they tend to pick up quite a large amount of population. They tend to hit quite a large amount. And so they have a large false positive ratio inherent in them. And for the purposes of this illustration, I've got rule 1 here, which is a 10% false positive ratio. But of course, one rule doesn't cover everything we need. So we have another rule, and it also has a 10% false positive ratio. And then we have another, so rule 3. And before we know it, because we're combining these rules in parallel, we're saying if any of them hit, then we generate an alert. We end up with a very high false positive ratio, in this case 30% in my little diagram on the left-hand side. So that's why a very coarse grained system generates a huge quantity of false positives. Now, what AI does, and particularly I'm talking here about machine learning, and actually the supervised type of machine learning, where we learn from what skilled investigators and skilled financial crime analysts do. What AI actually does is learn and generate a set of rules itself to mimic the behavior of your best investigators. And because it's machine generated, it can come up with a very large number of very specific rules to look for precise combinations of behavior. So in the example here I have the top, we have a AI generated rule that comprises a condition A, which, like the first rule, has a 10% false positive, but it only detects financial crime when it is combined with condition B. So something else has to be true. Two things have to be true for us to find financial crime. And condition B also has a 10% false positive ratio, which means when combined, they only have a 1% false positive ratio if we need them both to be true before we declare financial crime is found. And so what that means is, although an AI machine may generate very many more rules than a human being could possibly do, each of those rules will be so much more focused and so much more precise that in combination, their false positive rate is still much less. So in my case here, 5% as opposed to the 30%. So I want to bring across two messages in that. One is that AI is just a fancy way of generating rules. The system still fundamentally works in the same way under the bonnet. And because those rules can be really precise, we can really cut down on the false positives that the machine generates. I hope that makes sense. Okay, so let's look now at how using AI can be a bit different from using a rules-based system. I've said that AI just generates a lot of rules behind the scenes, and that's what it does. But how does it do it? An AI is just like, it learns just the way we learn. It learns by example and it learns by pattern. So you need to give it lots of different examples of different behavior in different situations and tell it what your adjudication is. Was it suspicious? Was it not? Show it another example, do it again, do it again, do it again. And if you do it enough times, it learns, just like a child learns, what's good and what's bad, what's suspicious and what isn't. But it needs patterns and it needs normal behavior. It needs to see what's normal to learn the abnormal as well. Another aspect of AI is that it needs to see the bigger picture. The more attributes you can give an AI machine, the more fuller view of the customer, the more you can tell it about who it's considering, the better a job it will do. The more it can differentiate between suspicious circumstances and not. An AI machine can't really put its hand up and ask questions to fill in the gaps when it doesn't know something. So the more you can feed it the information up front, the better a job it will do. And similarly, it needs behavior over time. It needs a stable history, again, to establish this normal background to then be able to spot the abnormal. So it needs that stable pool of data to be able to work with. And the final thing I'd bring out in terms of AI is that it needs precision and correlation in its data. And this is super important. So quality data, everybody knows the phrase sort of garbage in, garbage out. You have to give it good information for it to learn well, just like you have to show a child good examples for it to learn well. And those examples in AI's case have to be really consistent. So you can't show it one set of information and take one decision and then a different set and take a different decision. They have to be consistent. And crucially, the examples that you teach it have to relate between the inputs that you give it about what's the situation for that customer and the decision of the investigator that is learning from. If you show it an investigator decision where the investigator has made that decision for some completely different reason than what's in the data, the machine can't know that. It can't learn that. It can't differentiate what the reason was that the investigator did what they did, and so it will learn the wrong thing. And this is probably one of the most key lessons in implementing AI systems is there has to be correlation between the input data and the output data. Otherwise, you teach the machine to do the wrong thing. Data is everything, and that's why I titled this slide "The Quest for Good Data," because that's really the crux of all AI machine learning success. However, there's a few other things that are a bit different about how we use AI, and particularly different for the people who are working with the machines to adapt to and to change. So like I said before, in a traditional approach, what I'm calling a forward filter, we're used to having risk stewards, experts, subject matter experts in financial crime, deciding what the rules for the machine should be. So they look at topologies, they see previous behavior, and they say, if this behavior happens again, then I want to have an alert on this behavior. I want to know that that's going on in my customer set. And so you program the machine, you tell it what those rules are, it executes those rules on every customer, and when a customer behaves or has those characteristics, it flags them up, and the investigator takes a deeper look and potentially either validates that and escalates or rules it out. So far, so good. Very simple. AI works kind of the other way around. So then what do I mean by that? So in a supervised AI approach, we start with the investigator. So the investigator has a body of casework, and they label that casework to say what was going on in their expert opinion. Was it good? Was it bad? Was it money laundering? Was it structuring? Was it pass-through accounts? Whatever behavior they see, they label. And they say, this is what this was. And if you have enough of those cases, you can teach your machine to look for the correlations between the characteristics of the customers and those labels. So the machine starts to detect cases where those characteristics are present, the characteristics that correlated with the labels. So in this way, we're operating backwards. We're not telling the machine what to do. The machine is intuiting, it is learning what to do based on what we tell it we like. And it gives us more of what we like. Now, obviously, the risk there is the machine simply reproduces the past and things move on. So it's important to retrain AI machines to keep up with the latest developments. And there are also anomaly detection techniques that we can use to look for true outliers that the human beings haven't spotted yet either, which I'll maybe come to in another call, or potentially I can cover in a question if you'd like. But what's key to take away from this is that the process works in the opposite direction. No longer are we setting rules and telling the machine what to do. We are showing it examples, and it is learning what to do. It's a really, really key difference, and one people sometimes struggle to get their heads around. Okay, so that's another example of how AI is different as we use it. Okay, one other thing to bring out here, I think, in considering AI, is some of the pitfalls to look for when you're bringing it in. And the real truth is there is no magic. There is no magic AI box that will always get everything right. And if you remember back to what I said at the start, even if you have a very accurate machine, the maths of the problem are somewhat against you. And just to reiterate that again, even if your machine is 99.9% accurate, so it's an amazing AI machine, it's almost perfect, but you've only got 0.1 of your customers are suspicious, you'll still get 50% false positives. So the more you de-risk your customer book, the more you get rid of financial crime, the harder it is to drive your false positive ratio down, no matter what you do almost. So it's a real trade-off. Another key trade-off is the trade-off between alert efficiency and risk coverage. And again, this is the classic trade-off that sits at the heart of most financial crime detection. And what I'm showing here on the graph is two lines. So a sort of greenish line on the left, which is a rules-based system only, and a slightly more bluish line, which is a rules and AI-based system slightly on the right. And both rules represent the trade-off between risk coverage, which is how much of the bad behavior you find, and alert efficiency, how many false positives you generate in the process of doing that. So if we look at the dark blue dot on the traditional rules-based line, so it sits somewhere on the curve, it's a balance, and it represents the thresholds that we put in our rules. So these are the parameters, the limits, the points at which we decide it's suspicious or not, which are usually set by our subject matter experts. So if you have more than 5 transactions in a certain period, or your volume goes up by more than 25%, or whatever, those are those numbers that you pick. And if you pick those numbers really conservatively, so you move your thresholds really, really high up, what happens is that you get really good alert efficiency, because you're only catching the most extreme, egregious cases. They're nearly always of concern. They're nearly always suspicious. So you get really great alert efficiency. So your detection is really, really effective, or really, really efficient. But the problem is it's not that effective, because you've set your thresholds so high that you miss a lot of potentially suspicious behavior, and your risk coverage, therefore, is very low. Now, what you can do is you can lower your thresholds. You can say, okay, well, I'm being a bit too conservative. Let's lower all my thresholds. Let's pull my thresholds down. And if we do that, what do we get? Well, we catch a lot more behavior. We're more likely to improve our risk coverage, because the behavior doesn't have to be so egregious for us to catch it. But unfortunately, as we do it, we widen our net and we catch a lot of fish that we don't really want, that they're fine. So our alert efficiency tails off at that point. So we're playing with this trade-off of, on the one hand, we want really great risk coverage. So we want to find all the financial crime there is. But on the other hand, we also want really good alert efficiency. And we don't want to have to wade through a load of noise in the process. And that's hard. What AI enables us to do is to move the curve slightly to the right. So for the same point, we can decide whether we would like to have either reduced false positives. So we can say, okay, we're going to keep our risk coverage the same. We don't want to lower our guard, but we will get reduced false positives because our AI is a better detector and produces less of those unwanted alerts. Or alternatively, we could say, actually, we'll stick with the volume of noise that we get and false positives, but we really, really want to drive that detection right up as high as we possibly can. We want to find all the crime we can, and so we'll push our focus into doing that. Or we can do a bit of both. But what AI gives you is that opportunity to move your needle a little bit in either direction, or a bit in both directions if that's what you prefer. But the trade-off is always there. There is no way of getting around it, and there is no magic to how the AI systems work. I hope that makes sense. Okay, so let's look at some other pitfalls to look out for when you're introducing AI. And I'm bringing out 4 lessons here that I've learned, and mistakes that I've made in the past in introducing AI systems. And I've titled this slide, "The maths is easy, the change is hard." because it really is. Introducing these systems is a lift inside most organizations. So let's look at the first one. So at the top left, we have getting data takes time. So if you remember, I said at the start, getting good quality data, getting data that correlates well is absolutely critical. And again, in my experience, you spend the vast majority of your time at acquiring that data, wrangling it, connecting it, filtering it, joining it, making it good, so that you can train a machine on it. So that's a large percentage of your time. And then quite a bit of the time is then spent on getting an AI model that you can approve, that will get through the necessary model governance requirements and all the regulation that goes around that, making sure you fully understand what your machine is going to do and how it's going to work. And rightly so, because it's a complicated business and it needs to be done correctly. But only really a tiny slice of your time is actually spent on development. I would say it's very small in comparison. Most of the time is getting the data, understanding the model, and getting other people to understand how it works. So getting data takes time. Moving down to the bottom left, we have don't train too soon. And what I mean by that is training a machine learning model relies on having good labeled data. So having casework, financial crime casework that's been adjudicated by experts and has been labeled accordingly as to whether there's concern or not. Now, sometimes what people can do in a rush to introduce AI is that they take a data set and they think they've labeled it, they think they've come to the final conclusion, and they rush to train a machine. And what can happen is that there are still more investigation to go. There's still more information to come out. There's still more new leads to follow. And so some of the case labels then change after time. And what you find is that you've trained your machine on the wrong thing. And so it's learned the wrong behavior. And so you really need to be confident that you've reached an investigative steady state, an investigative plateau, if you will, before you say, right, that body of data is good. Let's go. Let's retrain our machine on that. The third area is don't judge too soon. And again, what I mean by this is when you're judging the performance of an AI platform, inevitably, if you're taking a different look at a problem from a new angle, where you haven't considered it before, often you just pick up a lot of behavior that you simply missed because you've been looking from a different direction. So you often get quite a spike in your AI performance at the start, and then it usually tails off a little bit. Now, it'll tail off where, in my case, certainly my experience is it tails off to be way better than where you started, but it's possibly not just quite as good as the first month. So give it time to settle before you take a judgment on just how good your AI is. And finally, make sure you train on the right casework. So this comes back to my correlation point. Make sure that if you've got data that you're trying to train on, the inputs that you're giving the machine really do correlate with the outcomes, the labels that your investigators have given it. If there's any other inputs that are not represented in that input data set, your machine will learn the wrong thing. So it's important to filter out all of those other cases so you get really good training data for your machine to work on. So I hope those little experiences of mine are useful for you as you start to think about bringing AI into your organization. So I'll just summarize now some of the points I've covered, and then I think we'll open the floor to questions, which my colleagues will help moderate. So some key takeaways from this short presentation. Firstly, AI really reduces false positives. Because of its ability to be so much more precise about how it detects financial crime, it reduces that dragnet of rules, and it can still pick out the bad behavior from the good behavior. It's a much better discriminator of behavior that we want to see. As a result of that, it's also better at finding suspicious behavior because it can have a much richer set of rules, a much richer body of detection than a human being could ever generate. So it's and it can consider many more variables about a customer, many more areas of concern that it can take into account. So it's much better at finding more suspicious behavior, not just finding it with less noise. But at the end of the day, and for your other colleagues who maybe need to understand AI as well, AI is just a better way of generating rules. That's really what it does. It's just those rules aren't easily human readable inside the machine. But the explanations that they give, and today's systems are now very capable of giving really good explanations of why the AI adjudicated things the way they did. The explanations can still be really accessible and auditable, etc. But it's just a better way of generating rules. There's nothing more. There's no more cleverness to it. There's no more magic. And finally, AI is data-led, risk steward informed. And what I mean by that is it's the data that tells the machine what to look for, and it's the risk steward that helps them make sure that the machine is fed with the right cases so that it learns the right behavior. And that's the twist from the way we used to do it before. So overall, if you want less false positives, if you want to find more crime, and you want to do it more efficiently, AI really is essential in the fight against financial crime. Thank you very much for your time, and I'll be very happy to take any questions.
Thanks so much, Michael. Yeah, that was brilliant. Thank you very much for taking us through that presentation. Some very, very interesting points you raise, particularly around input-output data, the stability of data and the precision that the tech needs. I just wanted to kick off with a few questions, if you don't mind. I mean, certainly, obviously, there's going to be some people who are still somewhat maybe skeptical about AI. I mean, what arguments can be made to convince people who are skeptical of using AI for AML purposes that it's important and it's worthwhile?
Yeah, so I think the best way to convince people is to look at its results. So the numbers really do speak for themselves in this case. So there are several large organizations now using AI to detect financial crime, and they are reporting uplifts in performance of maybe 3 to 5 times. They're finding 3 to 5 times more financial crime than they did with the old approach. And typically they may be getting 60-70% less false positives while they're doing it. So not only are they're capturing what they need to capture, but they're also reducing that noise and all the downstream impact that has. So I think that's the real compelling argument for AI is it simply works. It's simply a better mousetrap, if you will, than what we've been using to date. And I think that's now been proven in enough cases around the world that it works in different jurisdictions and different contexts, that we see regulators getting on board with it and encouraging people to use it, and we see large financial institutions really getting value out of it.
Yeah, brilliant. Do you think it's also about the kind of the education aspect as well, and the training as well? Because you mentioned around the data and good label data, and I'm sure that still has kind of margin for error, I guess, as you alluded to. I mean, what methods can companies use to train and improve AI for anti-financial crime? Is there any particular training methods that you've seen that work really well?
Yeah, so I guess there's 2 potential areas here we can consider. One is training the actual machine, so giving the machine lots of examples so that it can learn what's good and what's bad. And there's also training the people for how they can work with the machine and understand how the machine is adjudicating different cases and what it needs to work well. And I think the key on the people side, I mean, I've talked a lot about the technology, but on the people side, I think the key aspect is that labeling piece.
Yeah.
So it's absolutely critical that for the skilled investigators, who are the people the machine is learning from, that they are labeling the casework that they get accurately and correctly, so that you can then feed that into the machine and it can learn from their insights and their knowledge. Okay. And that takes a little bit of working through, so that people know when to apply labels, when not to. and making sure that those labels aren't being applied defensively, because there can be a tendency in our industry to just declare things as suspicious. It's kind of like the safe option. But if you do that, you teach the machine to keep flagging it, and it becomes a self-fulfilling prophecy, if you will, that you're lowering your bar all the time. So the machine learns to lower the bar, and then you feed back more, and so it goes on. So you need a disciplined approach to how you label if you're going to make AI really sing for you.
Yeah. Does that bring into it kind of brings me on to the next question about sort of the ethical aspects and how you kind of ensure the ethical use of AI in detecting financial crime, particularly in terms of privacy and data protection?
Yeah, this is a huge topic around the sort of responsible use of AI, and there are many aspects to it. So I mean, I mentioned in my remarks about model governance. So model governance is one of the first controls to make sure that we are not introducing models that are unfairly biased and that are consuming what are called features. So the input data that the model considers when it's adjudicating a new case, that they are permitted in the jurisdiction in which you're working, and that they're not overly intrusive or being used in an unfair way. So that's a really important control that organizations need to have.
Yeah.
And then there's other concerns that we need to be cognizant of about. Once you have a trained model, it represents the data that it was given to some degree. And so we need to make sure that if that's not shared inappropriately, because it may reflect the underlying population that it was trained on. So there's quite a number of different data privacy and data jurisdiction considerations when you're training and running an AI model.
Okay. Yeah, perfect. Thanks, Michael. Got a few questions from the audience, so
Sure.
Yeah, let's ask some of those. How does AI actually apply a risk-based approach, and can it assess cases taken into account new aspects?
Yep. So I think the risk-based approach, which is the standard methodology in the industry, is to focus your attention on where the greatest risk lies. And an AI model is no different from a rules-based system in that regard. And so the trade-off between what I call risk coverage and learned efficiency is the same for an AI system as a rules-based system. And you have to decide where to put your thresholds, if you will, and what's your risk appetite, what's the inherent risk inside your population, and therefore, where do you want to be on my curve? And an AI machine won't tell you that. You still have to make that judgment yourself about what your population, what's the risks in your business, and they will vary. So some people will have an AI machine that's very highly conservative, and some will have an AI machine that's a bit more liberal because their inherent risk in their organization is much lower.
Okay, perfect. How are these AI models proven and assessed? Are institutions proving their performance by means of sampling, or are they implementing this purely by means of statistics?
Yeah, so again, it's the same. It's pretty much the same techniques as the industry has used for years. So you look at wherever you draw the threshold. You look at cases that are above the line that are triggering, and are they triggering correctly? So that's the residual false positive ratio, if you will. But then you also look at cases that are below the line, so just below the whatever threshold you set, to say, well, actually, are we missing something? Do those cases have something in common, which means that there's another attribute or another piece of data that the machine needs? So maybe, for example, the machine doesn't know the branch code, for example, or the home location of the customer. Maybe it needs to know that. Maybe that's a useful piece of information. And so you need to constantly tune your models and say, okay, is it still performing the way I was expecting? Am I seeing some what they call model drift? So it's no longer performing as well. But all those techniques are exactly the same for AI as they are for a rules-based system. It's all about understanding your threshold and looking to see whether they're still consistently performing well for you. Again, there's no magic.
Yeah, thanks so much. I think I hope that answered your question, Simon. Taylor Castelli from Deutsche Bank. Have you heard of cases where AI learns rules that might be effective, but the rules don't make logical sense? And how do you provide oversight and governance of the rules the AI model develops?
Yeah,
Hopefully that makes sense.
Yeah, so that's a sort of two-part question. So typically, because of the way that AI generates a huge number of rules under the bonnet, you don't see the rules explicitly in the way that you would normally be able to in a rules-based system. So it's hard to empirically judge whether a rule doesn't make sense. The way I would suggest to think about that is, does it work? At the end of the day, does the collection of rules that the AI has built find more financial crime, and does it do it with less noise than your traditional system? If it does, then I think that's the mark of success. I think, again, if you're prepared to trust the outcomes of your best investigators, and you can show that your machine behaves like your best investigator, then the need to understand the detail behind exactly how that's done is perhaps less.
Yeah. Okay. If any of you, if anyone would like to have a call with Michael or anyone at the Hawk team, just reach out to us at Transform Finance, and we'll set that up for you. If there's any, if you want to dive a bit deeper and ask any further questions and have a chat about their specific tech and some of the case studies that the team have. What about the explainability of alerts triggered by AI models? And that was just asking a bit more information about the alerts and how they're triggered.
Yeah, so I think this is the area where AI machine learning has really improved in the last few years, to the point at which it's now possible for the machine to give really good plain English, or whichever language you prefer, natural language descriptions of why it triggered, and which features, which input values caused it to think that an investigator would have found that suspicious. Yeah. So it can explain, both in the particular case of the example that you're considering, but also in the generic case of how often are these particular input features adding value or not adding value, in which types of cases do they add value. So you see the leading technologies now being able to do that in a way they just couldn't do 3 or 4 years ago. So it was a fair challenge, I think, back in the day, that AI was unexplainable. I think now it's as explainable as a human being. I mean, at the end of the day, how much do we all really understand about how we make decisions inside our own heads? And the machine does at least as good a job, I think, now, as it did, much better than it did in the past.
You talked a lot about why AI tech is essential, Michael, but some banks are a bit further ahead than other institutions in terms of adopting this tech and seem to be leading the way, while some still seem to be stalling or have some reservations. And how should banks be adopting AI tech? What challenges are they facing, and why are some banks still maybe stalling on full AI adoption, do you think?
Yeah, so I think that one of the big challenges is data. So getting your data into a position where you can actually train an AI model and reap some of those benefits. And there's no substitute for good old-fashioned hard work in bringing that data together and understanding it well to train an AI model, and that takes investment and time. But boy, is it worth it in the false positives you reduce. I think the other thing maybe points to the conversation we had earlier about explainability. So I think previously people thought, oh, well, it's all magic. I don't really understand how it works. The regulators won't trust it. I can't use it, et cetera, et cetera. And again, I think that is changing now. So we're seeing number of regulators around the world actively encouraging organizations to look at these types of technologies and accepting the fact that they work in a slightly different way, and that's okay if the results are better. So it always comes back to, are the results better? If they are, then it's better outcomes for the organization, it's better outcomes for the society, it's better outcomes for the regulators. So, and I think people are now getting a lot more comfortable with it just actually works better. So let's not cling on to the past, which simply just doesn't work as well. Let's embrace the future, and that's why I say AI is essential, because if you want to do well in this game, and believe me, the criminals won't hang back. They're embracing technology as fast as anything. We need to look at what's working and then do more of it.
Yeah, perfect. Thanks so much, Michael. Very, very interesting, and we'll share the kind of on-demand content with all of the viewers, and like I said, anyone else who wants to set up a call and discuss further. See if there's any last couple of questions coming through for you. How long does it take for an institution to implement an AI model? Are the traditional rules-based systems fully redundant in those cases?
Okay, again, another good two-part question. So the time taken varies, and it varies again based on how good the data is. So the actual process of training a model and starting to get some good results can be very quick, weeks. It's not that difficult if your data's in good shape. And then most of the time is actually spent sort of getting, like I said in the earlier slides, getting approval to use it, making sure that it's ethical and goes through the various governance bodies, etc., and plumbing it into your system, whether that's as an add-on, as an overlay on top of an existing system or whatever. And that typically takes a few months. Right. So, but the actual maths bit, the bit that actually does the heavy lifting, is weeks or even days, if your data is good.
Yeah.
And to the second part of that question, does this mean traditional rules-based systems are fully redundant? This is a point of debate in the industry. My personal view is I would say not. And there are two reasons for that. Firstly, if there are circumstances in which you want guaranteed 100%, there are no exceptions, there are no other reasons why you want a particular set of circumstances to always trigger an alert, then a rule is still the best way to do it. And there are certain occasions where particularly regulators mandate that, and you don't need the power of AI to do that. If you're that crystal clear about what you want, then a rule is a great way to do it.
Yeah.
And the other area where I'd say rules still have a place is where we see new behavior and we need to build up a body of casework to teach the AI. So one of the other difficulties can be, how do you bootstrap the system when something new comes along, when the criminals start doing something different? Mm-hmm. You don't have enough casework to teach the AI what to look for. So you need to have you often can have some rules that start to trigger that for you. They don't generate too much noise, but they get you going. And then as soon as you get going, then you can switch over to the AI once you've got enough casework. So personally, I think there's still a place for rules alongside an AI-based system. Okay. But it's in those marginal, or not marginal, in those more extreme cases that AI isn't always the best answer.
Okay, that's interesting. And then another one was regarding any good practice or recommendations regarding model updates.
Yep. So I think, so two things to say here on model updates. So one is do update your model, absolutely. So nearly all models, tend to drift and tend to become less good over time. Society changes, people change, the world changes. So you need to keep your models up to date. And typically, I would say quarterly is a good metric to have in your head as to how often you need to kind of retrain your models. I think the other area where people sometimes struggle is it's very easy to get stuck in the model governance loop. So if you're too restrictive about, oh, I dare not change my model, until I've understood every last piece of it, about what the new candidate, upgrade might be, you can find yourself paralyzed on an old version. And you see some organizations getting stuck on models for like, a year, 2 years. And actually, they're just hurting themselves in doing that. So in an attempt to be very compliant, they actually result in worse outcomes.
Okay.
So there comes a point where you have to trade off between, have you examined every possible, bolt and widget inside your model, or is it better just to say, the results are good, let's go with it? There's a trade-off like in all things. So I would recommend that.
Yeah, perfect. Well, thank you so much, Michael. That was fantastic. Very, very interesting. And thank you to Falk as well, and sharing your expertise and excellent case studies and lots to take away and key takeaways. So we will share the on-demand content and access with all the attendees. And if anyone wishes to take the discussion further, please just reach out. I think on that note, that was very, very informative. We do have one last question, which we would like to squeeze in. Most definitely. Can generative AI improve QA processes, and how?
Okay, so that's very topical. So generative AI is the latest AI algorithms that use a thing called a transformer logic to predict the sequencing of words or other interaction. So this is what's behind ChatGPT and that kind of thing. And to the question, yes, very much so, I think. So we see generative AI being used as a way of summarizing casework, so particularly case notes that investigators have produced, and being able to then kind of check off whether that case description, that case narrative has included all the things that it should have included. So has it covered the background of the customer well enough? Tick. Has it covered what happened in the lead up to the suspicious event? Tick. Has it covered the suspicious event? Tick. Has it covered what it thinks is actually the underlying typology? Tick. And a generative AI approach can scan a body of text and tell you whether those things have all been done. It can read the language, if you will, and pick that out. I think that's very powerful from a QA point of view, to allow you to focus in on perhaps those cases that are maybe not written so well, and actually help you improve the training of the analyst investigator population to say, yeah, maybe these folk need a bit more guidance on how to do it, because they're consistently maybe not producing to the right standard. And you can't have a QA analyst read every report, or at least at a certain scale you can't. But you certainly can have a Gen AI machine do it. And that gives you kind of 100% QA, which is something that organizations dream for. So yes, I think it absolutely can, and we're seeing some examples of that now in the industry that we're working with, where that's really being successful.
Wow. Okay, brilliant. Yeah, thank you. Was there any other points or summarize your key takeaways once more, Michael, because it was an extremely informative presentation and lots to go on and lots to build on.
Yeah, so just to summarize for folks, so AI reduces your false positives. AI helps you find more suspicious behavior. It's just really a clever way of generating rules, and it really is essential. So don't hold back. Go try it. You'll be glad you did.
Thanks very much, everyone, for joining the session today. And like I said, you'll get the on-demand content coming through, and we'll be more than happy to set up a call with Michael and the Hawk team to dive a little bit deeper and discuss your individual specific needs. And thank you so much for joining, and we look forward to seeing you at a future webinar. So thanks so much.
Thank you all very much for your time.
Thank you.
Appreciate the opportunity. Thank you.
Thanks, Michael.